Dividend investing is hands down one of the easiest ways to create passive income, and over the years, this style of investing has been gaining in popularity with more people taking an interest, which is awesome to see. But with that, there are numerous myths that keep getting spread around about dividend investing that we need to shed some light on, and that's what we're going to be doing in this video. But before we get to that, in case you're new to the channel, my name is Ryan, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks, and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, guys, leave me a comment below and let me know what are some of the biggest lies and falsehoods that you've heard about dividend investing. There's a lot of crazy stuff out there, so I'd be curious to know about some of the things you've heard. One of the biggest lies that I know gets spread around is the idea that dividends are free money, and guys, I honestly don't know where this comes from. While it's true that once you have money invested in dividend-paying stocks, they will pay you those dividends without you having to lift a finger, but the idea that this is free money is just not true. Dividends are funded by a company's free cash flow, which is the money they have left over after they've paid all their expenses, taxes, and any other financial obligations. With this free cash flow, the company could do a handful of things like just keep it as cash in the bank account, it can reinvest back into the business to further its growth, it can make acquisitions, pay down debt, buy back any of the company's outstanding shares, or the company can pay a dividend. So while a dividend might feel like free money, it's actually not, and it's being paid out of the company's leftover free cash flow. And with that in mind, considering there's all these other potential uses for that free cash flow like we just mentioned, you want to make sure the company isn't giving all of it to the dividend. As a shareholder, you might enjoy that in the short term, but from a long-term perspective, you want a company to have a more balanced dividend policy and make sure they're tending to these other areas like paying down debt and reinvesting back into the company to further its growth. Anyway, moving on, the next thing that I see all the time is the idea that dividend investors don't care about growth. People think that all we care about is the income, all we care about is getting that high yield, but that's just not true. With that said though, I am actually hesitant to call this an outright lie because there are some investors out there who do only care about the income, and that's why you see some people investing things like TSOY, which has a near 54% yield, or ARR, which has an insane 114% yield. I don't even know how that happens. But as someone who's been a part of the dividend investing community for at least a few years now, I can say with a high degree of confidence that those type of investors are the minority by a long shot. Most of the dividend investors I come in contact with have a much more balanced approach and may have a few high yielders in the portfolio. I mean, I certainly do as well, but most of us prefer to emphasize dividend growth and total return instead of just going after the highest yield possible. Most of us know that dividend growth is essential and actually should be prioritized if you're going to be investing for a long period of time, and a lot of us know that dividend growth actually tells you something about the quality of the stocks you're invested in. If you think about it, only a company that's seeing consistent growth in its earnings can sustain dividend growth over a long period of time, and also typically earnings growth tends to lead to share price growth. In other words, dividend growth equals earnings growth equals share price growth. So if a company is able to consistently grow their dividend over a long period of time as a result of them growing their earnings, then a nice total return might come right along with it. Moving on, another lie that people believe about dividend investing is the idea that dividend aristocrats and dividend kings are always safe investments. Now, while an extensive dividend growth history still does matter and shows that a company has been able to weather various economic storms and had the financial prudence to continue rewarding shareholders in the process, it's important to remember that dividends are never guaranteed, and even the most seemingly safe dividend king can cut their dividend at any time. One somewhat recent example of this actually is VF Corporation, ticker symbol VFC. This is the company that owns popular brands like the North Face, Dickies, JanSport, and Vans, which is one of my personal favorites. But anyway, VF Corporation was a dividend king and had been growing their dividend for over 50 years before they cut it nearly in half at the beginning of this year. While many dividend aristocrats and dividend kings are typically regarded as being these sleep well at night stocks, once again, it's important to remember that dividends are never guaranteed and anything can happen at any given time. Moving on to the next one, another belief that many people have, especially those who aren't dividend investors themselves, which is understandable, is the idea that dividends are pointless unless you have a lot of money. These people think that unless you have a $1 million portfolio or a $2 million portfolio, you're wasting your time with dividends because the income you'll be generating is pretty much nothing special. In all honesty, I do kind of see where they're coming from because you do need a lot of money invested to reach a point where you're able to live off of your investments. But that's also true irregardless of dividends. For you to be able to retire, even if you're going to be implementing something like the 4% rule, which some argue is antiquated and doesn't work anymore. But either way, you're going to need a lot of money invested before you are financially independent. As it pertains to dividends, though, I would hardly call them pointless, even if you don't have a multi-million-dollar portfolio. Speaking personally, I only have about $50,000 in my portfolio, and I'm at a point where I'm bringing in just about $200 per month in dividends on average. And while this clearly isn't enough to pay all of my bills, it could pay some of them if I wanted it to. And just seeing how this income continues to grow over time motivates me to keep pressing on and keep investing as much as I can, knowing that someday it will reach a point where it's able to cover all of my expenses. And there are other psychological benefits to dividend investing as well. Like, for example, because it's a buy and hold strategy by nature, it can reduce the stress that comes along with constantly checking the market and feeling like you need to frequently be trading in and out of different stocks. When you invest for dividends, you're focused on the long-term health and stability of the companies in your portfolio rather than the short-term market fluctuations that will happen along the way. Staying focused on the long term can help you avoid making rash decisions whenever these market downturns do come about. And instead of freaking out about it, it could actually be something that gets you excited because now you can buy these cash flowing assets at a cheaper price. Anyway, moving on, one of the biggest misconceptions about dividend investing is that it's just for retirees. The thought here is that dividend investing only makes sense for retirees because they're the ones who rely on their investments to cover their living expenses. Also, dividend paying companies tend to be less volatile than other types of stocks, so retirees seek out these more conservative investments to preserve their wealth. Truth be told, investors of all ages can experience the benefits of this style of investing, and actually it's better to start dividend investing when you're younger because you have more time on your side to harness the power of compounding. The longer your investment time horizon, the more your reinvested dividends can accumulate, which in turn allows for even more significant reinvestment, which defines the dividend snowball effect that we all know and love. Anyway, the next thing that I hear all the time is that you can't beat the market if you're a dividend investor, and that's just not true. Since I started documenting my investing journey here on YouTube, my portfolio has outperformed the market by quite a bit, which is certainly more so due to beginner's luck than my own ingenuity, if I'm being honest. And this outperformance may certainly cease to exist as time goes on. We'll have to see what happens, but I share this to show that it is possible to generate market-beating total returns as a dividend investor. And there are quite a few dividend-paying stocks out there that have historically delivered better total returns than the market as a whole, like AbbVie, Lowe's, Packaging Corporation of America, Rollins, Snap-on, and United Health Group, just to name a few. And I know, guys, past performance doesn't guarantee future returns. I get it, but still, if it happened before, it's possible that it could happen again. Anyway, moving on, many people think that dividend investing is boring. They think it is such a slow way to invest and they would have more fun watching paint dry. And I will admit, dividend investing is slow, especially when you first get started. It's not something that typically involves making fast trades in and out of stocks or seeing high fly returns overnight. Like, this isn't the Wolf of Wall Street. But dividend investing is definitely not boring. Getting passive income and seeing that income grow every single week and every single month is extremely rewarding, and speaking personally is one of the greatest thrills that I get as an investor. With that in mind though, it's important to remember that dividend investing is a long-term game, and it's definitely not a get-rich-quick way to invest. Just like anything else, if you want to do it right, and if you want to build something worthwhile, it's going to take time. And I know it may seem like it's going to take forever to see results, especially if you are just getting started, but you will reach a point, and it will happen sooner than you think, where that dividend snowball really starts to take off. And that's what I'm telling you about in this next video right over here. I'm going to share with you where this point is, when it happened for me, and what it's going to take to reach this point in your own investing journey. So click right over here to learn all about it, and I'll see you in the next one.